right? Like, what are the best methods of communication, I would say. It's one of the most important things. How often do we need to see each other is important, okay? Because from my experience, you need to talk to your business banker every 3 months, at least, to keep a good relationship, sometimes month to month, right? So I would think that's very important. Ask your business banker, like, what is your experience in my industry? Or what have you seen that has worked? What resources do you have for my type of business?
Okay. Because you're more educated. And that's what's happening. They see that you're not kind of
Kamely, for me to apply for a business loan, a business line of credit, is completely the same. It's very standard. We're going to need, if it's a business that has been established for more than 2 years, we need the 2 most recent years of business taxes. We need the 2 most recent years of personal taxes. We need the P&L, the profit and loss and balance sheet, year to end. Okay, for example, this year you don't have your taxes yet. Business year is not over, but you can give me the profit and loss so I can see what your gains, your losses, your business assets are from beginning of the year till May 30th, for example. Okay. Other questions that I will ask when you sit in front of me is understand your structure. How is your business structured? Right? Are you the only owner? Are there any authorized signers that you need to add? Are you, for example, the percentage is very important. For example, if you apply for credit, right, it is required that the person that's applying for credit under the business has more than 25% ownership, okay? So if you have less than 10% ownership on the business, I can disregard you from the credit application. But if you have more than 25% ownership, then you get to decide, say, for example, I have like you and I are business owners. You're 50% owner and I'm 50% owner. But I say, you have better credit than I do, so let's go move forward with the application and you will be the guarantor. That's totally fine. And I'm out of the picture. Okay, now, if I have bad credit and he has good credit and we go together and I'm like, okay, let's both apply, that's going to get declined because they're going to look at both of our credits. So it's not worth it. So it's good to also, if you have a business partner, to know how or where they stand financially. It's very important. I know it's a very delicate conversation, but it will help your business succeed big time and faster. And also, it will give you a better result when you come sit down with us. That's a great question. So the non-for-profit, there's no owner percentage, right? So I would look at the board members, and you tell me, typically the president or the secretary are the ones that will be on the accounts. The other ones are not necessary unless you would like me to add them. But with one person, it's fine. I will just need the meeting minutes, right, stating that, for example, Kamely will be the one in charge of taking care of the business financials at BMO Harris Bank for this company, and signed. And that's it. And the board meeting, so I can submit it to the account opening. Okay. So
Do you offer a way to apply for business credit that is not connected to your business, to your personal credit?
That's a good question. All the time people ask me, if I have a business EIN, why are you looking at my personal credit? Well, we're looking at the guarantor. So who's the guarantor? Is it you? Yes, you have a social. We're going to have to put that in because you are the one that's going to pay that loan back, right? At the end of the day. So we want to make sure that that person has, we call it the five C's of credits, right? The collateral, capacity, character, capital, to repay back a credit history, to repay back this loan. So it is important, not because you have a business means that your personal credit now doesn't matter. But no, as far as the other people, if they are going to be listed as a guarantor, then we will have that, we will need to know a little bit more about them. And we're going to run their credit if they have that more than 25% ownership. It's in and I can tell you from Wells Fargo that I work, Bank of America, Growth Financial, Bay First Bank, I work there also, and BMO. We're gonna look at your personal credit when applying for business credit. There's no way, because we need to put somebody as a guarantor. The only I would say type of business that wouldn't affect anything would be a not-for-profit, because there's no ownership. So what do we look for in that case? We look at donations, how many members do you have, tell me about your charity, right? And what do you do if there's other sources of revenues, what activities are you doing? That's what we care about, right? But when it's a for-profit, we are looking at that owner or guarantor, or when it's a bigger loan, like who's the borrower. Okay, I think I'm getting where you guys are and your question. So, will the credit be or affect your personal side? No. No. What I'm talking about is, will you as an individual, right? Your credit score be with your brand? Yes. Does that explain the difference?
I don't know if it does, because it never messes up my personal stuff when I want to do whatever I want to do.
No.
And it doesn't throw me over whatever the business does. It is separate.
Correct. So, for example, if you apply for a business credit card and you pull your personal credit report,
Nope.
right, but they're going to look at the DUNS, and they're also going to look at your credit, personal credit. But the debt is not going to go under your personal credit. Does that make sense?
Yes.
So yes, we're stand on the side. It's separate. Yeah, that's what I mean. So if you have business credit, and this is why also, thank you for bringing that up. When you apply for business loans or lines of credits, we need a debt schedule on the business side, because we don't know by pulling your credit what debt do you have under your business, because as you said, it doesn't affect it. So that's exactly how it works in that term. But to apply for lending, we're gonna pull your credit just to see what's your character and who's the borrower, and that's gonna also be part of the application process, okay? But when the loan is booked, it will not show on your personal side. It will be on the business side through the EIN number.
Kimberly, what do you mean by show your character? Can you elaborate on that more?
Yeah, so the character includes you making payments on time, right? Your credit history, if there's any collection payments or any collection history that you haven't paid. So that's what tells you about how, I would say, what's your behavior, right? Are you somebody that pays a loan back on time, or sometimes that's somebody that forgets to make a payment? Like, your responsibility, your level of responsibility, I would say. So we're huge on diversity. I would say when I got hired, that was the first thing that they told me, because I was looking, at Bank of America, Growth Financial. I gotta tell you, when I was in my commercial team, I was the only woman, okay, and I was the only Latina. It was white men, and they were on their 60s, I would say, and they wouldn't allow young women an opportunity to be part of their team. So, and I mean, I don't think that's fair, because we all deserve the same opportunities and we all have the same education. Like, I didn't mention this, but I went to school. I have a bachelor's in accounting. I never pursued being a CPA because I started when I'm in banking when I was 19. So I did my career. It took me 6 years to finish my bachelor's while I was a banker. So I was like pair with like, if I go a CPA, now I'm starting back at zero, and I have, but I take it as, as a way of having discipline, as to have education, to looking at financials. So it helps me. It helps me. So that's one of the BMO's, I would say, biggest factors. I would say we participate. I don't know if you, any of you attended last year. There is the Black and Latino Economic Summit. It was on the Marriott and Clearwater. So our bank was there. So we participate in these different events that other major banks are not being participant on, to help the community. the fact that I am coming here, that BMO gives me the opportunity to step out of the office to do this, it's huge. Bank of America, Wells Fargo, they're like, you need to make 60 calls, and you need to tell me how many people wanted to apply for credit card. And no, that's not BMO. We must get out there, share our word and what we do. Although we're not the best in marketing, because you will not see a banner or a commercial from BMO, we have really good people, good people in our branches, diverse team, people from everywhere. And that's why they want to do it, because they understand that there is an opportunity and a missing link for the minorities.
Yeah.
So they have this, as I was mentioning, with our specific program for minorities, we have more leniency for when it comes to applying for credit. And just to give you an example, right in front of our building, there's a CPA. He's African American, I'm not going to say his name, but he banked with a Chase. And for years, Chase never gave him a line of credit or a credit card, okay? Came to BMO one time, not because, nobody referred him, he just walked into the office and he showed me his financials. He sent them right away, he's an accountant, it's all the PDFs that I needed right away, all nice, organized. And I got him a line of credit of $120,000 and a credit card through that program. He was amazed. And why? Because Chase, Bank of America, Wells Fargo, if you're looking for a line of credit, they're looking at a collateral.
Right.
If you don't have a collateral, they're not going to help you.
Yeah.
It has to be a building, it has to be inventory, an equipment, some type of asset,
Yeah.
and we don't. Our bank, as long as you have an account with us, right, and the line of credit is less than $500,000, we don't need a collateral. We don't need a collateral at all. More than $500,000, then we're looking at a building, we're looking at equipment and stuff like that. But it is very impressive. I haven't seen that at any other bank. I have friends from Bank of America
Right.
that refer me customers that need line of credit because they can get them approved over there. And they're
Just to add to that, and I don't mean to ask you any
no,
questions.
you're fine.
This is really fascinating. We deal with this all the time. Wells Fargo, relatively recently, for small businesses, they've almost done away with issuing lines of credit and basically offering instead credit cards, business credit cards, right? So you're saying that that's only occurring with Wells Fargo and some of the larger banks. You guys still are able to offer lines of credit to business, yes?
Yep.
Businesses that qualify.
Exactly. So that's a good question, because there is a difference for the time in business, what products you can apply for, right? So when you're looking at a line of credit, a term loan, commercial real estate, we're looking about at least 2 years in business, okay? If you don't have a collateral. Now, if the business is a startup, it is brand new, there's the SBA loans, right, the 7As, that will help with business acquisition, partner buyouts, if you need to get some equity cash out or anything like that, working capital, they're great. But if you're a startup and you don't have any business taxes, the easiest product, so talking about the different products that we have, so if you pull up this sheet, the lending solutions from BMO Harris Bank, we have the lines of credit that I mentioned, up to $500,000 without a collateral, but you can apply for up to $1 million, okay? If you have commercial real estate, as you were mentioning, we can put as a collateral as well. We have term loans that can be used for equipment, fixed assets. We have ones also for transportation, because we understand, in Florida there's a lot of people in trucking industries, people that need forklifts, that need dump trucks. We have those type of loans as well. We have commercial mortgages. We have, through the commercial lending, we have the SBA 7A, SBA 504, which are for businesses established for more than 2 years. And we have the construction loans as well. Now, with the construction industry, we're very specific. We don't do bridge loans. I don't know if we have anybody here in construction. No. Okay. But if you do have a friend or anybody that you know in that specific business, we only do loans in construction if they're in the business for remodeling homes. Nothing that has to do, for example, if they're doing a project and it's going to take them 6 months, no short term, no type of bridge loans. We don't do those things. We don't do any of that. It's one of the high risk industries in our portfolio. Standby, we have letters of credit, document letter, credit of we don't do this very often right here, but I would say our top products would be the term loans and the lines of credits. Commercial, because we have a cap of 1 million, it really depends. Properties right now mostly are over 1 million. We don't have that middle market right now that can handle those type of transactions. But I do have friends at other institutions that if that's the scenario, you have a property and you need to get equity cash out or you need to do a refinance, I can refer you to the correct banker in that scenario.